Good afternoon, everybody. Happy Thursday, and welcome to another StockTwits Q&A session. We're answering your questions live. I'm here with Scott Redler. Scott, you ready to dive right into this today?
Yeah, I feel like we're dropping the glamour, the glitz, no day in the life of the trader, all that, because there's just a lot of action, and I feel like we have so many questions coming in. It's earnings season, so we're just gonna get right to it. So, Brittany, my girl, let's go.
I'll take it away. So first, let's just start big picture. With the size of the bounce we saw earlier in the week this week, where do you stand with the S&P?
Just to give a quick and dirty on it, Friday, they tested the 50-day moving average. The S&P came in at that point, people didn't know where support would be. Can we test the 50-day? Can we hold the 50-day? What type of bounce would we have? And then Monday through Wednesday, you had a pretty a sizable bounce with some power. And if you look at the chart of the S&P at the symmetrical nature of it, this cup and handle type formation, which is the last pattern that I have in my five-part pattern series, all we really did is come back and retest this prior breakout and hold the 50-day. So then since then, you had 1, 2, 3 to the upside, and then even with everything going on today from IBM and Google and Intel and this and that, look what the spiders did. The spiders really did not pull in at all. So I would say, there is a chance that we come back to the bottom of the range, but for me, I think if you watch this on the SPX, the 1445-ish, I think if we could hold half of this 3-day move and stay in the upper end, it's only going to be a matter of time for us to take this out. But if all of a sudden we start to falter, we start to break this little area, we give up these moving averages again, then maybe we come back down and we need more time to go sideways, because if you take a macro look at the market and see where we came from, it's been a heck of a move all the way from last October, all the way from that October 4th low. You put things in perspective here, and here we are. This is where we are right now. It feels like the market's a lot weaker, but we're right there, and look at the distance we've traveled. So all in all, know your time frame. I think S&Ps are hanging in very, very well. And if you're not committed to the market, I think you could have sold some stuff today with the damage we've seen in some of the key stocks we used to trade very often. But at this point, you look at the chart, holding in very, very well.
All right, well, let's get down to the nitty-gritty here and talk Apple. Chet Sedman says, what are your thoughts on Apple here? Seems to be unable to stage any more than a 3-day bounce.
Right there, he just said it himself. 3-day bounce, that's what's been going on. Ever since Apple broke the 21-day moving average, it's been a trade, a two-way trade, even a better short. And I know as an investor, would you have made more money long or short in the last decade? Long. And you probably would have even made a hell of a lot more money just sitting in Apple through these type of time periods versus trading it. But for me, my job is to trade the intermediate trends. My job is to create cash flow around the technical patterns or whatever it is. Anyway, you look at Apple, it's been a long day. Here's when Apple changed for me. That was when it hit 700 and everyone in the sun started upgrading it to 850 or whatnot, and it failed. Remember, that's when they came out and said they only had 5 million iPhones sold? Well, anyway, never filled that gap right there. This is when I got out of my stock that I was trailing, 683. It was a really nice move. Remember last quarter when they missed? Came up, went sideways, and then had a really nice run. This was my stop. It was a nice move. Not knowing what really would go on here, but if you're traveling on a roadmap of the 8-day moving average this entire time and only testing the 21-day once, when you finally have it rolling over and you break it and close underneath it, that to me, gives you a change in character. And when you trade Apple, you need to know the character of the stock, whether it's a hold or whether it's a two-way trade. So anyway, with that said, you've had some trades along the way. Here was your first, actually there was a small one right here that got negated real quick, but really at the tactical moving average of first the 50-day moving average, if you look here, remember that 3-day trade? It was nice. Your entry could have been right around 656 if you didn't buy it on the 50-day. Next day you had a little bit of follow through. Let me make this a little bit bigger, so everyone could see it. So you had your little 3-day move, and then on this you had a small reversal, right? It traded through the prior high, went below it, actually closed negative. That could have got you out, and then you had follow through to the downside. And then what happened? Here's your 100-day moving average. Remember that trade? Okay, it gave you 3 days again. First day, little continuation, and then what did it do? It failed to get follow through. Opened up above or traded above 644, went as high as 647, and then failed. Pow. Then what did it do? It tried to do it again. Why not try it again, right? Closing the highs. Then you had a really nice day. And then what had happened 2 days ago? It failed, right? Traded above 650.30, went as high as 652.79. Some people might have done a reversal short trade there. Why not? It worked, it worked here, and it worked here, and it worked even sooner here. So with that said, that's what got me out of my trade. I tweeted yesterday, right around 6:51, I'm like, I'm done with my Apple 3-day long again. Sorry, I'm not investing in it now. I'm not holding it like I did here. I'm trading it because this is a very tradable pattern that's been going on here. And lo and behold, today, it broke this level. I drew this saying if there's any commitment to this move for this 3-day rule to change, it should hold, 642, 643. It sliced right through it on the open. And if you look even on the 3-minute chart, it never even attempted to fill the gap. Okay, if you go to the open here, we talk about tactics. Okay, it gapped down right. Then it tried to come up to see if anybody thought that it was on sale, because if it closed here, at a 644 and it opened down here at 638, that's 6 points on sale. Was it on sale? I don't think people thought so. Quick little move up. Was heavy. I think I tweeted about it. I'm like, Apple couldn't fill the majority of its gap. It's still heavy. And then lo and behold, it had a move all the way lower, and now it's still somewhat heavy. So tomorrow, what I would suggest is watch the 100-day again. If it doesn't break, if it doesn't hold the 100-day, you have to get out of the way. Same way this time it held the 50-day. Okay, it was a bounce. This time it closed below the 50-day, and it was a sell. Let's see what happens here with the 100-day. So at this point, there's still a lot of time, Britt, between, I think, the October 23rd date, which is the iPad mini, and then you have the earnings, which a lot of people know or think third quarter is not going to be good. And how can it be? You can't walk into an Apple store and walk out with an iPhone 5 or into a Verizon. It's like a mishmash. But I think what's going to be important, I think I'll see you again before then, is that if they do miss the third quarter, typically what happens is Apple has a great quarter and then they guide down, and people are like, oh, Apple always guides down. In order for the stock to stabilize, if they miss the quarter, they cannot guide down the fourth quarter. They want to see the demand that was pent up in the third quarter because they couldn't get the phones or they couldn't get the iPads or whatnot, that they're anticipating having no supply problems in the fourth quarter, and then perhaps it trades a little bit different. But there's also, again, a lot of trading between now and then. Your time frame. We'll follow up on that. But right now, the pattern has been 3 days, bounce. It's a sell, and see how it handles, today's low tomorrow or that 100-day moving average.
All right, well, let's address it right away. Google, everybody's talking about it. I see you on the virtual trading floor talking about what happened today. We've got lots of questions. First one from SecProf, who says, do we know what happened that caused the pre-release of Google's numbers? I know that's the why because of the action, but I'm curious as to know the cause. And David's asking, what can we learn?
There's a lot of good lessons to be learned there. First of all, why did it happen? They had a reporting service that was supposed to put it out later in the day, and they released it early. I don't even know, but that's, again, I don't think that's the important part. But he actually answered his own question. What happened was it was a soft earnings report. It did not meet expectations. Yes, fundamentally, is Google still great? Yeah. Is their PE low? Yes. But analysts always throw these crazy expectations and these numbers out. Google doesn't actually give guidance. So, Larry Page is all excited that it was a historic quarter. Meanwhile, the stock was ahead of itself, away from all the moving averages, and according to the street concerns, it wasn't good enough. So anyway, with that said, some of my rules and what you can learn here is two. First of all, you know me, I don't take stock into earnings because of what could happen. You have no control if you're not committed to a stock for a macro time period if you take it into earnings. You're either right or you're wrong. And why have that risk? I think you'd rather see the number, see the earnings, and then react afterwards with levels in place so you know how to handle it. One of my other rules is everyone, the day of earnings, I typically don't like to trade the stock either. Because, during the course of a day, some people start getting a little concerned about what could happen after the close, what are the earnings going to be, whatever. Lots of institutions start moving around their position last minute, and the character of the stock changes a lot. You don't really see something like we saw today with Google where it's just released, but stock could act strong and then all of a sudden within a few minutes act weak, and you were long and you're like, oh my goodness, it just went from relatively strong to relatively weak. How'd that happen? Or vice versa, because that day is a very important event. So it could be whipsawed. So for a day that something's going to report, I rarely trade it except for really, really quick trades, if that. So if you can't take the risk of holding through earnings, I'd say take this, options, some kind of strategy where risk is premium paid, and try not to trade a stock that's having earnings at night, because you could be long Google, go to the bathroom, and then all of a sudden they pre-announced and look what happened, or something a little less severe. So, another lesson is, I've talked about this many times. We've been in here and I've talked about landmines. Oh, we're not at war. What do you mean landmines? A landmine really is, when you step on something, or everyone steps on it, some people could like jump off real quick and maybe get a little hurt or lose a limb or a finger. But those standing on there, like the last one standing on that landmine, because they're trying to figure out what happened, they could really blow up. And in Google today, I will say it doesn't sound like a lot of time, there was a good minute or so when it started trading lower. Everyone's like, what's going on, what's going on? The earnings were released, in one of our chat rooms, the earnings were out there before it even hit Briefing Trade or any of that other stuff. And if you knew what the earnings were supposed to be, you would have known that these were light, okay? And even if it was a fake report or whatever, down 10, you're like, you know what? If I'm long this thing, I'm out of it. If you're looking to trade it, if you act quickly, you can make money. And if you go to Google real quickly, I'll just show you, first of all, here was this huge move to the downside today where it sliced through support here where, you look at the size of the move. I've spoken about this in Morning Call about Google. I was saying that if you're not committed into taking into earnings, you probably want to sell somewhere in here anyway, but that's besides the point. And again, here was your technical buy number one around 620. Here was your other technical buy when it went through the year high around 670. It irks the hell out of me when every major wirehouse starts joining the bandwagon and talking about it up here at 740, 750, saying 850, and then that happens. So there's a time to be in it, and then when everyone starts upgrading it, kind of what they did with Apple at 700, there's a time to take some profits. I'm not saying that they do it on purpose, it just always seems to happen that way. So anyway, you go to your 1 minute chart and look right here, okay, because I was sitting on my desk for some reason, I wasn't at my spin class, I had a conference call at 12, came back, right here, okay, when the news came out, you had a wide range bar, it was down about $10. You literally had, the low of this bar was right here, okay, and then you had another bar, okay, and then you even had another one. So for about 3 minutes, there was a little concern, there was a little what's going on, what's going on, what's going on. There was literally, 3 minutes that you could have reacted. So if you were in the stock, you're like, okay, this doesn't smell right, it doesn't act right, I'm out. Or if you were looking to get short, you could have pulled the trigger quickly when you saw, the earnings that were light. For me, I actually got short here, down 10, 12, and I covered into like this move, and I just, took some money, and I was happy with it because, me, I don't like really being short that often. It's hard for me, just not what I do well. And anyway, right when it was coming into, this big, time period, right around, 700, people started asking, where can this go? So that is another lesson of being prepared with your levels. And I think I tweeted right away, I'm like, you know what, let's, I don't think the 50-day holds, let's see 680, okay? And then it went down to like 676, it went $4 below 680, which for Google, that's like 40 cents in a normal stock. And that's when Sperling bought it on the virtual trading floor. That's when I did a quick little trade, and you had a nice little snapback from 676 back to almost 700, a 25-point move. Okay, and then it started fading into the close, and or fading into the halt, where there was a lot of two-way action there. But a few things is, one, after a big move and you're not going to take a stock into earnings, you don't need to be there the last day. Two, you don't need to be trading a stock, the day of earnings. And three, know what the company's looking to have, being announced. So you know how to react if something happens out of the ordinary, because there were a lot of people that weren't in the stock and were able to get short, looking at the report, analyzing it quickly, and seeing the price action and interpreting it into a nice trade and making good money there. So, with that said, talking about a little bit bigger picture, what now? So if you go to what now, let's go back to the chart, of Google. Let's go to the daily instead of the micro minute. And, it's at this point, I think, it technically actually, it is bent a little bit, right? It broke this upper area, but, it's still above the prior high of the year, right? It's still above this area. So all in all, if you bought it correctly, if you bought it when it broke this downtrend, or you bought it, when it crossed 620, you bought it when it cleared the 52-week high, and not up here chasing it, you're not in as much pain as someone else. It did come a little bit off the low, so moving forward, what do we know? We know that here is today's low, so that's the point of reference, right? 676. And then so we know this will be some big support coming in. So we'll see what goes on in the conference call. They're probably talking right now, and I'm in here talking to you guys, but I don't care. You know, I made my money there. I'll figure it out tomorrow or next week. And then here is where big support comes in at this particular point. I'm sure the 100-day will move up, and then we'll see how it acts right there. But all in all, a lot of lessons here, and it just shows you that, you know, for the stock market's a serious game. It could tear your head off if you don't have a set of rules, and it could reward you if you're prepared and you're ready to roll with levels and a little bit of a fundamental thesis.
Well, we're getting great follow-ups to everything that you're saying. We have to take a quick commercial break. Keep the questions coming. We'll be right back.
Hi, I'm Sean Hendelman of T3Live, where we train, coach, and mentor traders in order to help you put your money to work with confidence. The T3Live approach is a blueprint for you to recognize, adapt, and ultimately take advantage of different market conditions. To begin your training with T3Live, we would like to offer you the opportunity to enroll in our free 30-day online home study course. Fill in your name and email address, and I'll see you on the other side.
We're back answering your questions live. Scott, we've got a great one touching on more of this Google. Briscoe says, how does the crazy Google action reset strategy? It looks like Google took a few innocent bystanders with it, namely the spiders, Apple, Amazon. And we actually have a little back and forth going on here because year two says, Briscoe, the better question is if Google is having trouble monetizing mobile, what chance does Facebook have? Facebook down over 4.5% today.
Well, I think you connect a lot of the dots. But what also happened is when Google happened, you could have been reactive also. You know, Apple still was only down like $8, $9 and went down another 3 or 4. You know, all of a sudden people like, you know, if Google can't have a great earnings report, what's going to happen with other high beta names? So people just started selling Amazon and selling some of the others. And those who thought quickly made good money there, right? And because they didn't really bounce back that much. So you always have to think quickly. If this happens, what then? If that happens, what now? And you know, one thing that didn't happen is that, you know, I know people were talking, we're like, okay, IBM yesterday missed and was getting followed through downside. Intel is broken. Apple weak. Now Google's down 70 points. Why aren't these spiders going down? You know, why isn't the diamonds? Like, how could the market be so close to the highs? It's like bizarro land. You know, but then you have to go on the flip side and see maybe there's just other things that are holding the market up. You know, just with that note, you take a look at the XLF. You know, you go to the chart here, the financials. Financials didn't really get affected today, did they? You know, it's granted there's some broken things out there, but you know, the XLF broke above this last pennant type of pattern here and closed relatively strong, and they didn't come off. I don't know why, but they didn't. So they're still strong, so that's what's holding the market up. Look at the XHB. Look at that, the housing sector. We know that this has been one of the strongest sectors this year. And it closed on the highs, at the highs. Stocks like KBH continue to break out and hold. Lennar, let's see what that's doing. You know, broke out and hold. So there are some strong stocks out there. Look at XLI, which is another sector. So it just shows you that sometimes things that you're in, maybe you know your cheese got moved, and what used to be important in tech land, you know, might not be as important in some of these other areas. Like here's your XLI, still looking okay. You know, we've seen a lot of coal names start doing better. Steel, which was a laggard. People talk about like how do you know where the money's rotating? Well, on days when other things get beat up and other things hold, that's when you know where the money's rotating. And if you look at something like, let's say we'll go to Walter. Here you go, take a look at Walter on the chart. Walter, WLT. You know, we talked about a lower level laggard play, and you know, look how this held up. And some of these other coal names, maybe that's where money's going because technology is faltering right now. So there are spots. The OAHs, I think also, you know, look at this. Close on the highs. We talked about this tight little area, 1, 2, 3 days, and it didn't sell down, still showing some commitment. And then you want to talk, I think I threw out there natural gas before I get to Facebook. I'm like on this whole tangent here, so I'll just stay on the tangent. You know, guys have been saying natural gas is acting so much better. So we've been looking at ways to monetize it and make money with it. And today I tweeted about Boil. Makes sense, right? Natural gas, Boil, or fast food. But anyway, if you go to the chart on Boil, natural gas. Anyway, you look here, looks pretty set up, right? Look at this Boil. Look at this nice long-term resistance coming in where it's trying to poke its head above. Haven't seen this for a while, natural gas. So maybe look at natural gas stocks above all the moving averages, coming to a key area, closing the highs. There you go. So with all that said, I think the question was, if Google can't monetize
mobile,
then what about Facebook? And Facebook, I don't think anyone's heard me talk about it for like a week and a half because it's just been out of play week, and it's not really worth your time. And I'm sorry, at this point, there's 2 or 3 times when it was tradable. And recently, I know I tried to play it for a bounce and then had an upper level flag. And once that Barron's article came out and it broke it, and I haven't really looked at it since. You look at Facebook here, get a closer look. It's just been very weak. I think Sparling, who hates being short, is actually shorted. This is when the last try that it had, when it was flagging up here and broke below it. That was my stop. I got out of it. Remember we talked about it breaking this little area, gapped up, showed commitment, went sideways. Actually, here was your little Barron's article. Then it held this little gap, right? Showed some commitment, a higher low. Here's your low, higher low. Then this is when it failed. And that's when I said, I'm done with this until it shows me something different. We could revisit. And then today, it broke below another recent support area. So to me, it just continues to disappoint. It continues to be pressured. And, their earnings that they have coming out, I don't know how they're going to be, but I'd rather be out of the stock and trade it after, which is what looks to be the way to do it. And lastly, on that subject with IBM, just to show you how even if you wanted to be short, IBM, and you missed the first 7 points because IBM came out and, for the first time they didn't wow the street, which I don't know how they did it the last few times. But anyway, IBM came out and it gapped down like $7-8, right? IBM. But if you took it short, you had some risk. If you waited for the number to come out or waited for it to open up down and then traded accordingly, you still could have made a lot of money IBM short, but you would have missed a little bit of the move. So you go to IBM, because people are asking me about the stock, so I'll put it in here. I talked about how, it's gapping down. If it doesn't hold the 50-day, it could see the 100-day, okay? And if you look here, it gave you a little bit of a doji, okay, yesterday, and it didn't really come off the lows, but people weren't exactly sure, okay, so to speak. And then we said in the morning call, Mike, if it trades below yesterday's low, which was 198.55, you'll get a continuation short. And it opened up, traded below, and couldn't find a friend for the majority of the day. And even, you look at the 3-minute chart, I know that I had a little cash flow short also where here is where, this was, actually, let's go to, hold on, I want to go to the day before with the earnings. Okay, so here was your gap down, okay, on earnings. And we talk about if it can't fill a majority of the gap because it's, considered on sale. That's how weak it was. So here you go. Gap down, tried to push, failed. So here was your short entry, right here. You could have been short, in control of your own destiny, right around 201. Okay, 201. If you didn't want to short the strength here, once it broke the low of that first move, which was 235. This could have been your short entry. So yes, I'm sorry you missed this part, but you know how dangerous this part was to be short going into IBM unless you really had a thesis. You could have entered right here or right there and said, okay, I'm going to put my stop in at the high of this gap. And then you said, I could, you know what, I'm going to continue it tomorrow. If the commitment stays to the downside, it opened up, traded below the low of 198.55, and you had a really nice trade through the 200, through the 100, and and you still look at it, it still looks as if look where it is in the scheme of things. Okay, it's still it's coming into a huge uptrend, by the way, in which if it doesn't hold here, if it doesn't hold this 193.25, you could see it move back down to this area, which is 180, 185. So just be careful. IBM's come a long way, and it's been a chosen one. You look at the weekly, it's still all the way up here. So although it looks like it's just pulled in a ton, it really, this now is considered on the weekly, this is your first real potent bar. You haven't seen a bar like this, in a long time. I think almost all of this year. So, that type of bar usually has some type of continuation to it.
All right, well, you covered a lot of areas there, but what about metals? We have one from the Spy Surfer saying, what's your view on GLD and SLV?
Okay, I think that's a good question. Very spirited move right off of August 21st, August 20th. Silver went first, and gold continued, was fast, was furious. And then once it went up to bigger resistance, it changed a little bit. Okay, on Monday, if you remember me tweeting, I'm like, if you took your your short on the Thursday of last week when it did a small push to failure or red dog reversal or that negative candle, that Monday was a good spot to cover because of the size of the move. But let's see if that's going to be the actual bottom. Like, I don't know if it's a good long there, but at least cover it. So if you go to the chart now of GLD, you will see as far as the daily chart here, this is the move that ignited. Okay, if everyone remembers way back when, right here, boom. Okay, first things first, let's actually go show you with silver, because silver did it first. Silver actually led gold, which was interesting this time around, right there, and then came up, tried to hold higher, and then just didn't have enough juice. Right here, when it pretty much failed the breakout, I remember I was long silver, I got out of it. I'm like, I'm playing for a breakout above 34. If it doesn't look like it's going to happen, I'll get out of the way. Got out of the way, and I haven't really touched it since. But anyway, you go to the chart here, okay, a lot of guys weren't sure if it would correct more. You had your gap down right here on that Thursday when it made a partial gap fill, just so to speak, right here, and failed. That was another short-term sell signal, right? Came in, closing the lows, little small red dog reversal, so to speak. You had 3 down days, and and then it came off the lows. But now look, it's really not doing much right now, and it's not really any type of bounce. So the moving averages are starting to curl down. It's in its own little wedge right here, I would say. You got to be careful, or lower channel, so to speak. If it breaks below 31.52, you then have your 50-day right here, and then you have another area right in here, which is the 200-day, or actually, what's this? Yeah, and that's above this one. So a little weird stuff going on here. All in all, though, if you want to measure, which is what I do with the silver sometimes, is the Fibonacci retracement to see if there's commitment to this rally. And right here from the breakout price, not the bottom, right now all it's done is it's pulled in about 0.38% of this move. So as far as profit takers, not that many. As far as the speed, a little bit slower. And then here's your 50% right there. So I would say anytime you pull in more than 50% of a particular move, that just shows me that people aren't coming in a rush to buy the dip, so be a little careful. So we break this little pivot here in silver, which is 31.52. Your next level here is 30.71, and then the 61.8, which is considered really the line in the sand, comes in at 29.93, and by that point, everyone's going to hate it. You go to gold real quickly, too, to answer that question. Here you go. This is, here's your 50-day. I don't think it's just kind of out of play here. Here is that low from Monday. We're not there yet. So point of reference right here for GLD is 167.53. Then you have your 50-day, and then I'm sure the Fibonacci lines up right here also at 162. And that's really it. Sometimes it's easy to make money, or things are in motion. When it broke out, it was quick, pulled in quickly, went again, and now it's just in like an area or a time frame when it's harder to make money. Sometimes there's easy money when things are in motion and you can measure the speed and it's breaking out and it's holding the moving average, and sometimes when it's in wait and see mode. And I would say for gold and silver, if you're not committed and you're looking for an entry, I would just wait and see. Okay.
Financials. Ben C. Bank says the XLF had an outside day today. Is it something to be concerned about? He's long at 1632.
It seemed like it was going to be an outside day, but then that little end of the day move kept it in play. So I don't think there's anything to be so worried about. They are overbought. So, you can't just chase the financials at all times, even though it felt like you could have been chasing them all week and still made money. You go to the XLF and you'll see that, you go here. It's still, I would say more concerning would be is if it gave back this area. All in all, it's been a tremendous move. It was fueled right here when it broke out the day after Goldman Sachs broke out and led the way. You always see a little selling in front of a prior high. So I would say as long as it stays above this 1610, there's going to be pent-up momentum in the financials. I know I talked about Citigroup today, giving you a small red dog reversal. Look at the size of this move. From this breakout to the day of earnings on Monday, everyone tried to sell it down, closed strong, Pandit resigns, closes strong. So do I think there's a potential cute trade here in Citigroup? Maybe. It actually closed decently well considering where it came from. It was extended from all these moving averages. So some guys in our office are short from 38.48 with a stop in at the highs here at 38.72. I'm not. So see how it handles it. At this point, it's still holding up. It's still very strong. There's still a lot of shorts trapped. So I would just keep it tight. If it goes above today's high tomorrow, just get out of the way because, again, the stock has been very, very strong, and anyone trying to short it has been, pretty much beat up. But it doesn't mean that you have to buy it, considering that it's just a little bit too extended in my taste. And if you look at something like Bank of America, I talked about it today. It's interesting. I think, if you don't talk to, if you're not following T3 Live all the time, this is just something to write down that here was the last buy price. It's coming into some big resistance. If the market's going to stay strong and the banks stay strong, make sure to catch Bank of America if it starts trading and closing above 960 to 980, because on the weekly chart, to me, it looks like, this stock has more movement and could see at least, $12 and maybe even 14 next year. So very slow mover, but it's something I think that has more upside if you want to hold it.
Well, while we're on the financials, Sheeple said, Scott, what's your opinion on AIG? I've been watching it. Looks like an 18-month cup and handle pattern on the weekly with a recent breakout.
All right, I'll take a look. A lot of guys have been trading AIG, and I'm not as active in it as I used to be when it really went. So if you look here at AIG, let's take a look at the chart, because I haven't really looked at it so closely. So we'll go to the daily chart. It's been acting well, definitely near the highs. I wouldn't consider like chasing it up there. Here, I guess, is what you're talking about with the cup and handle, right? A little sloppy. Here would be your cup. There's the resistance. Pulled in a little bit, held this uptrend. That it was holding. It's above the moving averages. Still acting well. I still think you stay with it. I personally love the group, the industry, but who am I to love it? I guess if this is what you're looking at here, is this cup and handle, with this being the cup, and then there being the handle over here. It's just breaking out above it. So from maybe 20 to whatever this price is, around 36. Yeah, it looks like it could see, up to the 40s. Government's, I guess, behind it, and the chart looks decent. So if you're an AIG fan and you're trading it and you're long it, as of now, I never like to buy things extended from the moving averages, but it also doesn't mean it's a short.
All right, well, that is all the time we have for questions today. Scott, any closing thoughts?
That's it?
That's all we have for today.
All right, well, closing thoughts are this. I think it's, again, important to know that the market complexion changes. And I know a lot of people have been trying to short the last few days because, oh my God, IBM is getting beat up, Microsoft's broken, Intel, Dell, Hewlett-Packard, these guys are, no longer even, on anyone's radar. Apple's been weak. Google now just got hit. But money rotates in different sectors. You saw the banks stronger, the home builders are stronger, some of the drug names are stronger. So there's always movement somewhere. I think this time period's a little different. There's a lot of divergences. It feels a little bizarro. So for me, if that's the case, I'll pull back. I'm still not in a portfolio approach. First quarter I had 12 to 15 stocks and I was high-fiving. It was easy. It was my stocks. It was technology. It was financials. And it worked. In August through September, it was the same thing. Apple was on its way to 700, and I was holding other stocks, and maybe not 14 or so, but maybe like 6 to 8. And now, even though the market seems like it's holding in there, it's just not. It feels like it's not really my market. So what I'll do is I'll go tactical. And today, you could have made a lot of money with tactics. You could have made money, the last few days long Apple with that 3-day rule, and then you could have made money shorted. You could have made money trading Google. You could have done a lot of different things. You could have been all over the banks this week. So. So you just have to know what you're good at, what you're willing to put on the line, and know when you want to have risk, in front of you. And at this particular point, I'd rather be tactical. It's been a great year. I'm not exactly sure, how easy things are going to be moving forward. You can't just buy stocks because of the name. Who knows how they're going to treat Apple coming into earnings, or what goes on later with Google tomorrow. There's a lot of unknowns, and when there's unknowns, if you're not comfortable, just do less. You could always trade more at another particular time. You could always put more risk on, and when you have more clarity. And right now, although we're holding up, technology's weak. You look at the cues here. To me, here's that head and shoulders pattern where left shoulder, head, right shoulder broke down. We rallied back to it, and then that support became resistance, and we came down. So the question is, do we go sideways here and hold this little area, or do we break it and then all of a sudden, test the moving average moving down here, the 100-day, or who knows if we even get to the 200-day. So we'll see. But for me, when technology is not leading the way, I'm a little bit more tactical. Because again, I'm just not as comfortable holding coal names or industrials or this and that. I'll trade them, and then maybe if I trade them more often, I'll get a little bit more comfortable, and then I'll sit with them. But for now, there's no need to do something that I'm not ready to put myself on the line with, so I'll just wait. And I think that's what everyone should do out there. Wait, it's your money, wait till there's clarity, and that's that.
Good advice. All right, thank you everyone for the great questions. Have a great night.